Every single day this week, there was a green bullish 30-minute confirmation. There was a green bullish 30-minute pattern at the levels I gave you on call options. We absolutely crushed it again. The SPY ended up forming a 30-minute bullish candlestick on the first 30-minute candlestick at 10 a.m. It was the same exact 30-minute candle as yesterday, and they were both at the key levels I gave you. Yesterday, it was at the gap for the gap reversal. Today, it was at the level that I featured in the title, 581.50. With that being said, I ended up going 4 for 5 on the day. There was also a break above the previous closing price, and then the SPY dropped back down to retest, forming the green, red, green pattern. The next 30 minutes was a bullish breakout, and surely enough, we crushed it on calls there. I'm going to be breaking this down to you. You should have had a phenomenal green day today if you bought calls at the levels using the 30-minute chart and you sold the moves, you sell into the moves, you set the profit stops, and you move the profit stops up. I'm going to be explaining to you how we were able to have such a successful day. I'm going to be breaking it down to you, recapping the overall trades. If you've been using what I've been teaching you within these videos, you should have had a phenomenal green day today. Now, in terms of the new levels, based off the daily chart pattern, I don't have too much to say. So in terms of making a video a day before the market opens, sometimes I'm going to have a strong bias in a sense, but I'm always going to look to use confirmations at the levels that I'm biased at, right? And then certain situations, we have automation levels where I'll look to just get in without a confirmation and then scale in once there's a confirmation. It gets more advanced. But in terms of the daily chart pattern, we do have a red, green, red pattern. We have a red candlestick facing to the downside. I went back throughout the chart history in this overall situation. I genuinely don't have too much to say about the current daily chart pattern. So there is currently a lack of daily chart confirmation that I am seeing. Now, one thing that I did identify with the overall pattern that is occurring on the daily chart is if the SPY gaps down, which it currently is, it could be a potentially strong bearish day. Now, if we do end up opening up lower than the previous closing price, 580.01, then in order for us to have a strong bearish day, the SPY needs to stay under this 578.50. You can see right here, 578.50, we have very strong support. That was the level along with 579 where I told you to buy call options. Surely enough, there was a green bullish 30-minute confirmation. You should have been in on call options at 10 a.m. And then in last night's video, I told you to buy call options at 581.50 if you're seeing a bullish 30-minute confirmation. As you can see, there was the same bullish 30-minute confirmation compared to the day before at the level that I gave you. And surely enough, the next 30 minutes was a bullish breakout and SPY ended up pushing higher. Sell the moves, set the profit stops, move the profit stops higher. Losing is a personal choice. And as you can see, we had a breakout above the gap. If you look at the chart yesterday, we had a breakout above the gap. Green, red, green, buy call options on the opening of the 30-minute candlestick, sell the rip. Here we go again, a break above the previous closing price, green, red, green, buy call options on the opening of the 30-minute candlestick, sell the rip. The same exact patterns happened compared to yesterday. And we caught all these in real time. Are you seeing the value within the 30-minute chart and how simple trading can be? You lay out a foundation using the daily chart, you identify key levels, and then you use the 30-minute chart patterns at these levels. Everything I am showing you is going to keep on happening, but you have to show up and capture these trends in real time. Do you see how history literally repeated in an exact T to a similar cycle? This 30-minute candlestick at the key level I told you to buy calls, and then it spikes higher above the previous closing price. This same candlestick that I told you to buy calls at 581.50, and then it spikes higher above the previous closing price. A break above the previous closing price, a break above the previous closing price, and then you have previous resistance right here, previous resistance right here, previous resistance right here, previous resistance right here, a breakout, a retest, green, red, green. Once you see the pattern, buy call options, next 30 minutes, sell the rip, right? A break above resistance, green, red, green, buy call options on the next 30 minutes, sell the rip. That pattern has been walking flawlessly, man. If you watched last night's video, you should have seen the market like this, man. We caught all of this in real time. So like I said, man, based off the daily chart pattern in terms of the foundation, there's not always going to be something to say, right? So I don't have too much to say about the current daily chart pattern. The good news is we have many systems to make money. we have key levels. And then in terms of the key levels, you can literally just use the 30-minute patterns at the key levels. Obviously, I like having that daily chart, pattern, because it helps give you a bias on an overall bullish and bearish trend day. But some days it's just not going to have that. And you have to be aware of that the following day, right? But then I also have the pre-market system, and then we have the normal trading hour system. This is just a plan a day before in advance. There's many more plans and there's many more systems that we have, right? Like I said, you can literally just use key levels as a foundation without the daily chart. And you can use the 30-minute patterns, right? But I like having everything within my favor. But like I said, I'm not seeing too much on the overall daily chart, but I am seeing if the SPY does gap down, it could be an overall bearish closing day. Now, in order for that to actually occur, if we are gapping down, the SPY needs to stay below this like 578.70 to 578.50. If we are staying below that and reacting bearish, we will be on pace to go to 577.50 for a true nice breakdown. We need to go under 577.50. If we finally drop under that 577.50 and it's gapping down, we're reacting bearish, the next level we're going to drop to is going to be 574.55. If the SPY is reacting bearish and it's gapping down, this would be the main zone where I would personally be interested in buying call options. But like I said, if it gaps down, it could potentially be a bearish day. So use strong confirmations if you're going with just a simple support level, right? Because it can potentially close bearish if we are gapping down, which we currently are. We'll see, how we open up tomorrow. But 574.50, 574.50, we have a very nice strong wick. And on this day, it spiked from 574.50 very, very quickly to that 578, right? So 574.50 is going to be very strong support. That would be heading into tomorrow, basically the overall best support level to consider buying call options if we do end up gapping down, right? And then the next level below that is going to be 571.50, right? So in terms of like your best overall support zones to consider buying call options on the SPY, like I said, 574.50, very strong support right here, very strong support right here. If it reacts bullish with the pins on the 30-minute chart, it has strong upside potential, strong upside potential. Always focus on levels that are going to give you strong upside potential within your favor. And if you're on the wrong side of the trade, you can always switch sides very quickly and make it all back in a sense. With that being said, that's the overall game plan that I'm looking at on the SPY. If it's reacting bearish, man, it's just going to be a little bit tough on the put side, man, because if it's reacting bearish at this 577.50, it could be a little bit tough because I tend to avoid buying put options at key overall support levels, right? Like you can see right here, you got a lot of support, this 578, and then you got big move ups. But the reality is if it cracks and reacts bearish, especially if it's gapping down, instead of that big move to the upside, it's going to have the big move to the downside. Then it's going to attempt to either bounce at 574.50 to overall 571.60. So like I said, man, in terms of making this video the night before, it's not going to be as useful in terms of like confirmations and stuff like that. It's more of just giving you the levels, and then you're going to have to use the 30-minute patterns at the overall levels, right? But just to quickly just kind of go over the levels, just some basic information. I'm telling you, heading into tomorrow, everything's going to be completely different. This is just simply sharing with you some basic levels, right? Not every single day I'm going to have an amazing game plan for you in terms of the night before. But as the day opens up, we have amazing trading opportunities at the levels and new plans develop. But just to give you some basic price action, as you can see right here, 574.50 is make or break support, very likely to bounce at this overall level. Use strong confirmations though, because if we gap down, it could potentially close bearish, right? So in terms of the 574.50 level, if you measure the move, if it bottoms at 574.50, it'll quickly go back to 577. If it cracks and reacts as a resistance, it'll quickly drop to 571.50. I'm just showing you how to measure the overall moves, and then you can decide if it's reacting bearish or bullish at the overall levels. It's going to be a lot more advanced heading into tomorrow, right? So that's what can potentially happen at that overall level in terms of both sides, and then you have to use confirmations at the overall level. And then in terms of other levels, this 579 is going to be like make or break. 577.50 to 579, make or break resistance. If it breaks above that, we go to 582. If it reacts bearish, we go to 577.50 to 576.50. So that's the overall just basic price action. Like I said, man, in terms of the night before, sometimes I'll have a very strong bias. Sometimes I'll have key levels where I'm just going to get in an automated level. Like I told you at the gap, just literally buy calls, right? So in terms of this overall plan, I'm not seeing any of that. So this is just more just going to be basic price action. It's going to get very more advanced heading into tomorrow because we have many trading systems. Now, this video is really going to be more useful in terms of just recapping the overall trades, right? So let's get into that. So in terms of the education, let's get straight into it. I ended up buying SPY calls directly at market open. So I bought these 583 calls at 69 cents a contract. They did end up dropping into the 40-cent range. I was down over 40% very, very quickly. So for those of you who are trading at the most volatile times, which is going to be, market open and power hour 3 to 4 p.m., right? If you're on the wrong side of the move, initially, you can experience a very big drawdown, 30, 40, 50%, right? With that being said, we don't use stop losses. How do we protect our risk if we are not using stop losses? The contracts are so cheap, you can put in your entire position size as your max risk per trade. So if the trade expires, goes to worthless, goes to zero, the most you lose is what you put into the option contracts, right? Therefore, you're losing your max risk per trade. And the way we're able to make good money on that by not putting a lot of money in a sense is big percentage gains. The percentage gains are going to be so fucking big that it's going to outweigh people who are using tight stop losses, taking big position size, trying to scalp small wins, right? So we're doing the complete opposite of what everybody's doing. If I'm buying calls directly at market open, this can flush for an hour straight, and later in the day, they can go in the money, and I could sell in the money for a massive percentage gain, right? So as soon as I entered this trade, it literally dropped 40% within minutes. Now, this is what I personally dislike about trading directly at market open. It can typically take, at times, 30 minutes for the trend to develop. At times it could be just a coin toss where it just chops. It goes straight down, it goes straight fucking up, it chops, right? That's why it's always good in a sense to wait until 10 a.m. because that's when the first 30-minute candlestick ends up closing. But why did I decide to just get in? Because this is something I rarely do, and I'm not big on trading in the morning. There's a lot of reasons because of that, but one of the main reasons is the chart lacks development. But I had a plan beforehand, and the plan was to buy call options at 581.50. And if you've been studying the overall videos throughout the past 3 days, every single level that I gave you for calls worked, and there was a confirmation to actually trade at the overall level, right? So what was the reasoning in terms of the confirmation that I actually used to decide to buy these call options directly at market open? Because like I said, this is something that I rarely do. So in terms of the confirmation that I use to decide to buy call options, for those of you who study these videos and watch throughout the overall recaps, you are well aware of this pattern. You have this red bearish pin facing to the downside. You have this red bearish pin facing to the upside. I tell you all the time, when this pattern right here forms, and you can also see it formed later on the day, and we caught this one too, the next 30 minutes tends to be a spike and it tends to be a bullish reversal. In terms of where do you get in, you try to get in on the dip towards the previous 30-minute low, and the next 30-minute candle is supposed to close green and bullish, right? That's an overall pattern. Now you can use that pattern, you can sit here and say, okay, there's a red bearish candlestick facing to the downside. There's a red bearish candlestick facing to the upside. Next 30 minutes, buy call options towards the previous 30-minute low. It's going to try to react bullish, right? That's very basic. A lot of people, they'll figure out patterns and they'll just use the patterns and they'll lose money. They'll just use strategies and they lose money because it's too fucking basic. You need a stack. And the stack was the key level. You understand? I had a key level based off the daily chart. I explained to you in last night's video on why 581.50 was my key level to be buying call options. So I had a foundation and I had a key level, and this was the confirmation. What I'm telling you is you don't just kind of want to blindly buy into patterns. You need some sort of foundation. The foundation could be the daily chart, and then you need to understand supply and demand in terms of measuring the overall price action on the expected overall move. 581.50 is a massive level where a big move is going to occur. You can see right here, 581.50. If it cracks, we quickly drop to 578.50, right? So if it reacts bullish, you flip it and it can quickly spike to 584, right? So with that being said, this was a key overall level, and I explained it to you on the daily chart, and I used the pattern. And if you just studied throughout the videos, you should have saw that, right? So I used the pre-market chart as a confirmation, right? And just also studying this overall pattern I've been talking about a lot recently as well, just 3 slanted red candlesticks, right? So I understand there was 4 slanted in a sense, but just very similar overall moves. You had this 3 slanted red pattern, and then you had the red candlestick facing to the downside, red candlestick facing to the upside. Don't just use candlestick patterns. Use a foundation. You need some sort of key level. You need to understand the supply and demand. I had my foundation as the key level before in advance, and I confirmed this was the pattern, right? And next 30 minutes is going to be bullish. So as it was just dipping, I wanted to get into calls, and I'm well aware in terms of market open before this candlestick closing bullish and doing what it's supposed to do, it could just have a massive drop and then flip bullish, which was a gift to buy calls because the 30-minute candlestick was supposed to close bullish, right? The same thing happened later on throughout the day, and we caught this one as well. Red candlestick facing to the downside, red candlestick facing to the upside. 4 slanted red 30-minute candlesticks, 4 slanted red 30-minute candlesticks, right? And then you have this red candlestick to the downside, red candlestick to the upside, red candlestick to the downside, red candlestick to the upside. Where are you going to buy calls? Buy calls towards the previous 30-minute lows, buy calls towards the previous 30-minute lows. We absolutely crushed that overall trade. If you've been watching the videos, you should have seen the exact same pattern, right? So in terms of that trade, that was the reasoning for the calls. And like I said, we don't use stop losses. At some point in time, there is certain situations where we sell the move. If we're down 30, 40, 50% on a trade, sometimes we'll sell for a loss. It's very rarely, right? We like to hold our trades and sell in the money. We have the entire day for these contracts to go in the money. First 30 minutes, anything can happen, right? Big volatile moves. It can flip-flop before overall establishing the trend. Sometimes the trend is going to establish right at the gate where it just keeps on going up or keeps going down. Sometimes it's going to flip-flop like it did today. In terms of avoiding a flip-flop, you could just wait for the first 30-minute candlestick to close. But I didn't wait because I already had confirmations and I already had a plan before that, right? And then you could just add once there's a confirmation and then you sell into the rip of the next 30-minute candlesticks, set profit stops, sell into the overall moves, right? Once that 30-minute chart starts closing bearish, that's when you really should be holding in that particular situation. In that particular situation, you should have been stopped out for profit, setting your overall profit stops. 581.50 to 583.30 is a massive bullish move to the upside. So with that being said, on that overall trade, I took these SPY calls at 69 cents a contract, and I ended up selling at a very good exit on that overall trade. And I added at 63 cents once we were starting to see more confirmation. You can see right here, I made it very, very clear at 9:52 a.m. The calls are coming back to life. If you looked at the 1-minute chart and you just looked at the overall chart, it was clearly having a V-shaped recovery, which is another overall bullish pattern. And then in terms of more reasons to be bullish, it broke above the morning highs and then it started forming support and it started breaking above the previous closing price. Just more reasons to be bullish in a sense, along with the same bullish 30-minute candlestick that formed the day before. The same bullish 30-minute candlestick right here. It was at the key gap close reversal level where I told you to auto buy calls. And the same 30-minute bullish confirmation right here at the 581.50 level where I told you to buy calls, right? So even though I was down 40% on the trade, losing was a personal choice because I didn't use a stop loss. And if you didn't want to be down, simply wait for a bullish 30-minute confirmation. The downside is you could have missed out on the overall play. I was getting in at the best entries. If you waited for the bullish 30-minute confirmation, you would have been getting in at higher entries, but the timing would have been fucking impeccable, right? You would have had a great fucking timing where you would have never been down. But in certain situations, it's good to be down on a trade initially. You could scale into it. And then once you get more confirmations, you could even add to those winners like I was doing. I started to scale into the trade once that 1 and 5 minute chart started to develop as a V-shape recovery. This is a clear V, right? So with that being said, those were the main reasons for me on buying call options, using the game plan that I gave you yesterday, using the 30-minute chart, and then using the 1-minute chart in terms of confirmations to add as the V-shaped recovery. And then in terms of 10 a.m., you should have been in on call options 10 a.m., 100% sure. So if you used what I taught you, you should have been in on call options at the market open. You know, you have the slanted downtrend right here, and then you have red facing to the downside, red facing to the upside, buy call options, buy into the dip, right? If you wanted a better confirmation, 30 minutes, right there, green bullish 30-minute confirmation, and then you sell into the rip. Simple, easy trade, right? But it's not so simple and easy if you don't know what the fuck you're doing. If you're using a stop loss at market fucking open, when this can just flip sideways at the speed of fucking light, well, you deserve to lose money, right? If you don't know what the fuck you're doing, do not trade. I'm not freaking out if I'm down 30, 40, 50% at market open. I'm sizing in accordingly, putting in my max risk per trade. I'm holding the trade, right? And then the 30-minute bullish confirmation was a reason to even add to the trade, right? If you want to skip that first 30 minutes, completely fine. I don't blame you, man. That first 30 minutes was fucking hell at first. But once it started to come back to life and get those bullish confirmations on the V-shaped recovery, I began to add to the calls and I gained a lot of confidence once the 30-minute candlestick was closing bullish. So that was that overall trade. Now, in terms of the next trade, let's get into this. 583 calls at 60 cents a contract, right? And then I quickly got out at 78 cents a contract. Why did I buy call options at 11:11, right? You have this very angel number. Why did I decide to buy call options 11 minutes into that 11 a.m. 30-minute candle opening, right? So in terms of that overall trade, as you can see right here, if we take a look at the overall chart, this is 11 a.m. This is the opening of 11 a.m. The reason for calls, we had a breakout above resistance. The resistance was at 581.50. The SPY had a nice breakout above the resistance. It dropped back down to retest the previous resistance. In the middle of this candle, as the SPY was starting to bounce and react bullish at the previous closing price, forming many support before that, over an hour of support before that, right? The theory was showing that it was going to close this green bullish 30-minute confirmation. And if that occurs, it's going to be a green, red, green pattern as well, which is another confirmation of buy calls on the opening, right? So that was the reason for calls, the breakout and overall retest strategy on the SPY, right? And I'm just using the 30-minute chart. This is another reason why I decided to buy calls. I looked at the 30-minute chart and I said the same exact pattern is happening as that happened yesterday. You had this bullish breakout right here, same exact candlesticks. And then once the SPY had the breakout above the previous closing price and it formed this red candlestick here in the middle, this red candlestick in the middle right here, it started to bottom at the previous lows of that red 30-minute candle, which was my confirmation to buy calls with the theory that that 30-minute confirmation can close green and bullish, and that if it forms green, red, green, that's another confirmation to be buying call options at the opening of this 30-minute candlestick. So if you look at how I break that down, you could have bought call options right here for a better entry, and you could have also just waited if you wanted a more safe confirmation for this to close green, buy at a higher entry for the green, red, green pattern and sell the fucking rip. We ended up doing both, man. I'll take that better price all fucking day. The same exact pattern was repeating yesterday. SPY was forming the overall support. So that was the reasoning behind that overall trade, and I sold those at 78 cents a contract, going 2 for 2 on the overall day. So I had two very nice trades, using the 30-minute chart, using the level that I used in last night's video, right? So there's no fucking excuses to be read. Losing is a personal choice. If you are using the 30-minute confirmations at my overall level, I can assure you this system works. We have many members using this system, consistently making money within the market. Now, with that being said, in terms of the next overall trades, I had one small loss on calls, and then from there, I had two very nice win on calls. I timed these SPX calls fucking perfectly, man. Let's get into the last final trades. So 580.35 SPX calls at 265. I sold these at 480 for nearly a 100% profit return. This fucking trade, I told him at 1:43 p.m. Two big wins are coming up. And I took these SPY calls at like 71 cents, got my average down to 60 cents, and then I sold them at 71. That was a nice little win right there. But the big win came from SPX. I bought the SPY calls first. They started to drop. And then once I recognized it was time to get on SPX, I bought the SPX calls literally at the exact fucking lows. You can buy SPY first, and then if it drops against you, you can take a new strike on SPX and get a much better entry, and it's going to yield you much bigger percentage gains as well. With that being said, we had a lot of members take those SPY calls towards 54 cents. And we absolutely crushed it, man. I made it very clear, 1:48 p.m., I'm 100% certain that the next 30-minute candle will be bullish, and we are on pace for $582. And I just made it very clear and expressed my confidence on this overall trade, and we had many members take this trade, man, because the setup was fucking phenomenal, and it was at that overall key level, and we truly did absolutely crush it, man. You're going to see the fucking results. We had a member make over $1,200 on SPX. I sold at $480 a contract, nearly a 100% return. We had people selling those SPY calls. They were in at the 50s and 60s, getting out at the 80s. This was the fifth win I had on the day. I went 4 for 5 on the day. The loss was so fucking small, I cut it at the speed of light. And who banked on calls? We had plenty of people bank on calls, right? We had a guy make over $4,000 on calls. Let me see, man, if I can find, yeah, $4,200 on the day, going 3 for 3, man. So in terms of this overall trade, why did I decide to buy call options, and why was I so bullish, right? I was saying at 1:48 p.m., the next 30 minutes is going to be bullish. I'm 100% certain. So let's go to it, man. So right here, if we go to the overall 30-minute chart, I'm going to show you exactly what it is that I was seeing, right? So in terms of this situation, right, this candlestick right here, if you go to the opening, so this is 2 p.m., I was very bullish as this 30-minute candlestick was getting ready to close. Why? because it was the same exact pattern in the pre-market. This is so fucking obvious, man. Like I said, not everyone views the market the way I view it, but once they start to view it and gain this perception, they're going to be trading at a very high level if they're disciplined enough to stick with it. You have 4 red candlesticks slanted to the downside. You have 4 red candlesticks slanted to the downside. This 30-minute candlestick right here, I was buying call options as it was getting ready to close. Why? Because 4 slanted red candlesticks slanted to the downside. 4 slanted red candlesticks slanted to the downside. SPY's at key support, SPY's at key support, and then this was the main reason as well. Red bearish facing to the downside, red bearish facing to the upside, right? You see that? Now look, it's the same pattern. Red bearish facing to the downside, red bearish facing to the upside. What happens next 30 minutes? Next 30 minutes is a strong bullish 30-minute candlestick, and it even went up another 30 minutes. Next 30 minutes is a strong bullish 30-minute candlestick. As soon as we spiked and touched the previous closing price, we sold those calls because it's at major overall resistance, and the SPY cracked that previous support. Previous support right here cracks. If it spikes back up, it could react as a resistance. Take the fucking profit. If you want to leave runners, leave runners. You get stopped out for profit, setting the profit stops if it rejects against you. That was the reasoning behind calls. That is how I saw the market today. If you've been using what it is that I've been teaching with you, you go back and study every single fucking video throughout the past 2 months. You're going to see me talk about all the time. Break above resistance. This is resistance. Green, red, green. Buy call options. Sell the rip. Reason to be bullish right there. 3 slanted red, 3 slanted red. Well, this time it was 4 slanted red, 4 slanted red. And then this pattern, I talk about this all the time. Red facing to the downside, red facing to the upside. Red facing to the downside, red facing to the upside. Stacked with 4 slanted red, 4 slanted red. You see how I'm capturing all of these 30-minute fucking patterns? I'm looking at the 10-day 30-minute chart. I know the levels to be trading at. I understand the supply demand, and I'm waiting for the perfect 30-minute candlestick patterns to close. If you use what I'm teaching you, every single day, there is 2 to 4 very lucrative trades, right? So with that being said, that was the reasoning behind call options. If you are serious about trading alongside with us, it is the first link down below within the description. You can trade alongside with us starting tomorrow. We buy cheap, far, low risk, out of money option contracts. We're known for selling them deep in the money, making the biggest percentage gains within the market. We have the highest win rate in the game doing this. We do not use stop losses. At times, we will sell the moves if it makes sense to cut the loss. And then there's other times where we just hold and we sell them in the money. This is the only trading strategy where if you're trading with real money, you can put in your entire risk per trade as your entire position size. You're not risking a lot and you're able to make big dollar gains because the percentage gains are so fucking large and we're holding for the bigger wins. All of these trades that I made on calls, 50%, 100% returns in less than 30 minutes. If you want to outperform everyone within the market, it's the first link down below within the description. We're going to absolutely crush it heading into tomorrow. I will see you guys then.